It's not a surprise anymore for anyone following the markets closely that there is a shift happening or already happened in the markets as the last 2 weeks happened. Well, money is flowing away, flowing out from the tech sector and getting into the energy sector. Yes, energy and the reopening trade phase two. Why? Because first of all, Delta variant fears are kind of winding down a little bit. Second, the Fed is trying to calmed down the nerves of investors, but it's really a no-brainer here that they're going to do something about this inflation thing. So oil being part of the inflation standard and calculation benchmarks, well, if inflation is here to stay, which I believe it is the case, even though the reason behind inflation is not the same thing I view as the overall rest of the or many people see in the market, but that may be a subject for a standalone video. So just to say that energy is one of the best sector you may want to get in now, not only for the remaining part of 2021, but more importantly for the rest of 2022. Why? Because we have so many catalysts in the favor of oil, excuse me, and energy now. Not only oil prices are getting to a higher level because of a whole supply crunch, there is not enough supply to match the demand we've been seeing for these synchronized reopening status for all the economies around the globe. That's why, oil is going to be here one of the main focus for the rest of this year. But definitely as the Fed starts to increase rates, inflation, you also want to get part of that if you want to protect your capital and make more gains. Not only that, we will also see that if you look at the energy ETF from the S&P 500, you can see for the last 5 years, there is a catch up to do. I'm sorry, this is the energy S&P. There is a lot of catch up to do on this trade. If you compare this to the Jets, for example, or you compare this to the XLF, which is the financial sector, or even the retail sector, or the tech sector, everything is just whoop all the way up there. Energy is really the only lagging sector, and that has been because of some geopolitical aspects, but definitely COVID here. So that being said, we still are way below where we were prior to the pandemic starting. And from that point forward, we were still looking at more than a 10% catch up to be made. And we can, close the gap and even go further, because right here, the energy sector was sitting here with oil prices 50% lower to what they are today. So not only there is a big catch up to do, but I'm looking at maybe a level here to be touched where we had similar levels in price and gas. In oil and gas prices. So definitely looking at the 30% upside. And then this is just from a less volatile. So if you say, AC, I don't want to get into those small mid caps that can jump 12% on a day, but also go down 10% on a day. I just want something where I can steadily invest and not have to have a panic attack every single morning that I open my account. Well, I will say this ETF is definitely for you. Now, if you want to take some more risk and gain some more rewards, because that's where it works, right? You have to get into these stocks, which I am personally invested since the last 2 years. First of all, Callon Petroleum. Today, gained 3% on the last month. I've been doing a lot of catch up, talking about 45% gain. And on the last 5 years, still have some gaining to do. All right. Based on where oil prices are sitting. This company made 2 acquisitions since 2019. And based on where oil prices are going, it will increase its capacity to produce more oil on a tight crunch market. Putting it pretty much from a book value standpoint here at $120 a share. So we're talking about almost a 60% upside to be made if you get into the trade today. All right. Next on the list, Centennial Resource Development. Almost the same thing. That's the acquisition part. Sitting here and gained 6% today. Last month gained 33%. And based on where we were before the pandemic, we almost went above that. and we are sitting on the highest on the year today at around 750. But again, based on where oil prices are supposed to be trading for the remaining piece of this year in 2022, I mean, we're looking at double digits here. So from 10 to where we are now, 37% upside. And then we have Vermilion Energy. Same thing here. For the last month, gain a ton, 50%. And for the last 5 years, we are still way under where it was trading. Okay, we're looking at a 40%, almost a 40% upside based on the catch-up trade to be made. But again, as always, based on where oil or these companies will be making a ton of cash flow, increasing the share price of these companies, especially as money is being moved away from tech, which had a very great 2020. So I'm looking at potentially a 60% upside as well here. And then you have Tellurian. Tellurian, the share price is a little bit more affordable, especially if you're a beginner. And it's the same story here. Gain 28% so far this month, and where we are on the 5 years prior to the pandemic, we were sitting around $869 a share. So we are looking at a 57% upside. All right, these are non-negligible, type of gains here, guys. Now, Devon Energy, one of the most favorites from the hedge funds and Wall Street, last month gained 20%, and then for the last 5 years, even though it increased a little bit, we are looking at a 38% upside. It's because based on where oil is supposed to go and it's supposed to be trading, further, when you discount. I mean, guys, this can easily go to $40 a share, and this is exactly what the street has as price target. And now you also have Occidental Petroleum Corporation sitting at 30, same thing here. Last month, catch up to do, but on the 5 years, we also have some catch up to do here. I'm talking about a 34% upside. And then finally, USO, another ETF, if you still want to be a little bit not exposed to the volatility, this is definitely something you want to be invested in, but you won't get that 12% on a day as you can do on one of these stocks I shared with you earlier. There may be multiple other, but these are the ones I am personally invested in, and that's why I felt the need to share this with you, as energy is getting more and more focused as we get into this transition from the third to the fourth quarter. Let me know if you guys are already in one of these stocks and what do you think they are going to be in the next quarter.